The US dollar had a perfect chance to strengthen during last week's trading session, but for some reasons investors prefer to refrain from active trading after the news about the acceleration of consumer inflation. The manufacturing inflation rate decreased today. Some, though the inflation figures would postpone the Fed's rate cut from a much closer to the summer. However, after the data on the producer price index, the previous view about the possible easing in a March is relevant again. In our video review, we will continue to analyze market events that may shape investor sentiment this week. Important macroeconomic information will arrive on Tuesday, January 16, including a batch of data on the state of the British labour market. Investors pay special attention to the news on the number of applications for unemployment benefits, as this data among the rest of the freshest. On Tuesday, it will be the figure for December. According to forecast, the labor market should show signs of stability, which means that the Bank of England will have less reason to cut the interest rate. Against this backdrop, bulls will favor the British pound. Another issue is that the inflation report will be published on Wednesday, which will have a greater impact on the national currency. On Tuesday, we await news about the business sentiment of the European economic engine. In December, the indicator reached the highest level since March. Despite the current budget crisis in Germany, the assessment of the situation and economic expectations in the business environment has again slightly improved, as more and more respondents expect the ECB to lower interest rates in the medium term, and we will have more to say about this later. Although we can touch on the few important aspects, for example, the reason why the central banks want to lower the interest rate. The thing is that initially the rate was raised as a measure to curb inflation and slow down the growth of consumer prices. And now inflation has slowed down, and the interest rates can be gradually lowered, stimulating the development of local businesses. However, this may harm the national currencies because traders will not be able to get the previous swaps. That's why investors' interest in the Canadian currency may be rekindled by the news that inflation in Canada has resumed its growth. Against this news, markets expect the Canadian dollar to strengthen. On Wednesday, trading is expected to be much more active. The trading session will begin with the release of important news from China. First of all, we should pay attention to the report on the growth rate of the Chinese economy. According to forecast, China's GDP for the last 3 months of 2023 is likely to accelerate to 5.3% on a yearly basis. And this will be very positive news because the Chinese authorities have set the target level of economic growth of at 5% per year. The expected growth will be higher thanks to the stimulus measures from Beijing aimed at offsetting the effects of the crisis in the real estate sector. When it comes to China's economic growth prospects, we should pay attention to the country's industry, as the manufacturing sector is considered key to China's GDP. The forecast assumes a slowdown in the rate of output growth to 6.3% year-on-year, and despite the slowdown, the market will take the news positively, as the indicator saw a sharp increase to 6.6% from a 4.6% in November. The small correction in December is quite reasonable and expected. With such a strong production growth rate, the Australian dollar should be supported as the currency of the country that supplies commodities to China's industry. Next, let's get back to inflation. On Wednesday, 2 more UK inflation reports and the final estimate for the Eurozone countries will be published. In the United Kingdom, analysts expect the rate of price growth to slow to 3.8% on a yearly basis. The indicator is expected to hit the September 2021 low, still remaining above the 2% target, and this means that the Bank of England still does not have enough reason to start cutting its interest rate. The European Central Bank has no reason to act quite quickly. The publication of the inflation figures in the Eurozone is likely to confirm that the consumer prices accelerated in December for the first time since April. And the news will revive investor interest in the euro as a high-yielding currency. And in the United States, the December retail sales data is the key indicator. It's expected to rise by 0.3%, the same pace as in the previous months. The news is important for investors because the retail sales data shapes the outlook for the US economic growth, as the consumer spending accounts for more than two-thirds of total GDP. The continuation of the previous growth rate indicates some sustained growth, which is certainly very encouraging. In addition, this should support demand for the US assets among financial market participants. And we will monitor the market reaction to the above-mentioned reports. Subscribe to our channel and follow changes in market sentiment with us. Any comments, questions, and offers are welcomed. We wish you profitable trading and see you soon.